I'm not an amateur. I graduated with honors in finance, worked at a private equity firm, and at one point ranked in the top 5% of traders on eToro. I'm the kind of person who reads white papers before investing. Technical analysis, proficient. Risk management, methodical. Psychology, I thought I had it under control. But in March 2022, everything collapsed. That was when the crypto market was surging again after a brief correction. I had been watching Ethereum for 2 weeks, waiting for a textbook entry point. And then it came. A big green candle breaking through the $3,200 resistance. I hit buy. 10 minutes later, I was up 6%. I remember that feeling vividly. A rush of excitement rising from my chest and tingling at my fingertips. I felt invincible. I thought it is. Man, this time it's the big wave. Instead of taking profits, I doubled down. I increased my position. But just 2 hours later, Ethereum reversed. News from the Federal Reserve sent the markets tumbling. I tried to stay confident. That was my second mistake. When my account was down 15%, I started to panic. I switched to smaller time frames, looked for any reason to believe the price would rebound. But the more I looked, the more I felt the need to recover. So I deposited more, placed another trade, and in 3 days, I lost 92% of my account. I couldn't believe it. Someone like me, educated, experienced, systematic, had fallen nothing. That night I didn't sleep. I stared at the chart on my laptop screen. The candlesticks danced like they were mocking me. I didn't feel angry. I didn't feel hurt. I just felt empty. I started asking myself, why did I fail? Why did I, someone who thought they understood the market, get swept away by emotion like a rookie? And that's when I uncovered a terrifying truth. The market doesn't beat you with technique. It beats you with your own brain. In the next chapters, I'll tell you what no one ever taught me in school, what no textbook ever spelled out clearly. How the human brain, our most powerful tool, is also the biggest obstacle to becoming a winning trader. Not because you lack knowledge, not because you're stupid, but because you are human. And the human brain was not born to trade. I used to believe if I were smart and disciplined enough, I would win. But after my account crashed by 92%, I started reading the kinds of materials I used to dismiss. Books on psychology, neuroscience, and decision-making behavior. I wasn't looking for a new trading strategy anymore. I was trying to understand myself. And then I came across the first concept, amygdala hijack. When the amygdala takes over, reason shuts down. You're no longer the decision maker. You had now. The amygdala is a small almond-shaped part of the brain buried deep within the limbic system, responsible for fear and survival responses. The liv Rickenline, the Mhalata Oswines of Fishering usually this vidi, and the regional Carmen safe due to a lot of this trade. The best on mans. They look at see, okay? The Mook's primal alarm system thousands are someone cross. Peace Chris is why. The turn like a amygdala, when you see Bitcoin jump 5% in 10 minutes, green candles flashing, Twitter screaming, to the moon, the amygdala kicks in. It doesn't care about technical analysis. It only knows, opportunity, act now. When you see your account down 20% in an hour, the amygdala sounds the alarm again. Danger, exit now, get revenge. The rational brain, the prefrontal cortex, shuts down temporarily. It's like the power goes out in your command center, and you hit buy or sell before you even understand what's happening. I've experienced this hundreds of times without realizing it. I thought I was making logical decisions, but in reality, I was just reacting like some ancient creature afraid of a tiger. Science has shown dopamine is released when you sense profit potential or place a trade, triggering euphoria. Cortisol, the stress hormone, spikes when you lose money, pushing you to make fast, impulsive decisions. The prefrontal cortex, your logical center, gets suppressed when cortisol is high. Your body doesn't know this is just a $500 trade. It thinks you're about to die. And slowly, I began to understand. The problem isn't the chart. It's not the strategy. It's not the news. The problem is my brain wasn't built to trade, and if I don't learn how to control it, it will always control me. Want to win in the market? First, win over your own brain. The death of a trading account doesn't happen all at once. It creeps in, quietly, repeatedly, like a trap you don't even realize you've fallen into. I call it the death loop. And it begins with a feeling every trader has faced at some point. FOMO, fear of missing out. That week, Solana had just surged 40% in 3 hours. I was on the sidelines, watching the chart dance, my heart pounding. I told myself, it's okay, another opportunity will come. But deep down, I was lying to myself. Just one day later, when another altcoin, AVAX, started turning green fast, I didn't wait anymore. I jumped in, right in the middle of the pump. 30 minutes later, the price reversed. I was down 12%. I was angry. Angry for missing out on Solana. Angry for being caught in a bull trap. But most of all, angry because I felt disrespected by the market. And that's when the next phase of the loop began. Revenge. I'll get it back. Right now. I increased my position size. I picked the most volatile coins. I ignored risk management. I stopped reading charts. I just wanted to recover. That revenge mindset led me to trade number 3, number 4, number 5. All losses. After each losing trade, I opened an even bigger one. Like a gambler chasing losses. What I didn't realize was that, by then, the cortisol in my body had tripled. My rational brain had checked out. I was fully under the control of my instincts. And finally, the loop ended with an all-in. I put everything I had left into a single BTC USD trade with 20x leverage. I stared at the chart. 10 minutes, then 5, then 30 seconds. The price dropped 2%. Trade liquidated. Account 0. I didn't cry. I didn't scream. I just felt empty. I looked back on the past few days. Everything had unfolded like there was an invisible force guiding me through each stage, from FOMO, loss, revenge, account burn. And the strangest part is, I wasn't alone. In a trader forum, I read hundreds of stories just like mine. The same loop, the same ending. You don't lose money because you traded wrong. You lose money because you traded in the wrong state of mind.
FOMO isn't just a fear of missing out. It's a hidden force, a horde of invisible monsters living inside every trader's mind, and they're always hungry. I didn't realize this until I had lost nearly my entire account to a series of uncontrolled emotional decisions. One day I saw the Euro USD chart break out above the 1100 zone. After days of sideways movement, the price suddenly surged. My mind was tense like a stretched string. I felt that if I didn't enter a trade right then, I'd miss a once-in-a-lifetime opportunity. But in reality, I was chasing a shadow that had already passed. I clicked buy, and 15 minutes later, the price reversed. A loss. I didn't understand why I had acted so impulsively. Now I know. I was manipulated by a monster inside me. On another day, I was having coffee when I read the news that the Fed had changed its policy. The market jumped. I rushed into a trade without any analysis. What I didn't know was institutions had received the news seconds before I did, and their machines had already acted before I could even look at the chart. By the time I entered, the price had reversed. Another loss. There was a time when I got lured in by a Twitter post. This coin is about to go up 1,000%. I already bought in. I saw thousands of likes and hundreds of FOMO-fueled comments. I entered the trade immediately, thinking I was riding with the whales. A few days later, the coin dropped 30%. Then I found out the person who posted that tweet had bought in weeks earlier at a much lower price. I was just the latecomer. Another time, after a string of losing trades, I went mad. I couldn't accept losing money. I increased my position size, jumped into new trades without analysis. In my head, there was only one thought. I have to recover. But the more I tried, the more I lost. I wasn't trading with logic anymore. I was seeking revenge. And the market? It didn't care about my emotions. There was also a time when I actually made a profit. I bought Bitcoin at 34,000 and it rose to 35,000. But I was scared of losing that profit. I closed the trade early. The next day, the price hit 37,000. A week later, 40,000. I regretted it. I re-entered at the top. And of course, the price corrected and I lost again. That's when I realized I wasn't losing because of bad analysis. I was losing because I couldn't sit still with a winning trade. These monsters don't show themselves. They hide in every decision, every mouse click, every heartbeat spike when a green candle appears. They don't destroy your account in one blow. They nibble at it, bit by bit, using your own instincts against you. You think you're making trading decisions rationally.
The truth is, you're not even in control of your own mouse. Your brain clicks before you even have time to think. And the reason isn't you, it's the structure of your brain, shaped over 50,000 years ago. When our ancestors lived in the wild, danger lurked everywhere. A strange sound could mean a predator. A rare berry could be the key to survival. The human brain was designed to react fast, urgently, to survive in an instant, not to sit and patiently wait for a pattern confirmation on the 4-H chart. That emotional control center is called the amygdala, a tiny almond-shaped part deep inside the brain. It doesn't know the difference between a green Bitcoin candle and a wild animal. All it knows is something's moving fast. Act now. And that's when you FOMO. The first time I truly felt the amygdala hijack was when I saw a coin jump 12% in 10 minutes. My heart pounded, my palms were sweaty. I didn't analyze resistance levels, didn't check the volume. I just wanted to get in now before it's too late. Logic went silent. The amygdala screamed, and I obeyed. It wasn't until much later that I learned the amygdala reacts to threats in 0.07 seconds. The prefrontal cortex, the logic center, takes zero point 0.5 seconds to respond. You're not losing money because you're stupid. You're losing because your brain is still wired for the Stone Age, while the market operates like a casino run by supercomputers. But that's not all. After you enter a trade, if the price goes up a little, your brain releases dopamine, the pleasure chemical, the same one triggered by cocaine, video games, or social media addiction. You feel good. You want more. You open more charts. You increase position sizes. You become addicted to the feeling of entering trades, no longer focused on probabilities or risk. When you lose, cortisol, the stress hormone, floods your system. You no longer see chart patterns. You just want to get it all back. You start revenge trading, and you lose even more. I used to think I lacked discipline, but the truth is, I was using an ancient body to play a game designed to work against me. And from that, I learned, if you don't train your mind, you'll become prey to your own brain. I used to think the problem was my lack of discipline. I set goals like no more FOMO, only to jump into rushed trades again. I blamed myself for being weak, for lacking control, but I was wrong. The problem wasn't willpower, it was in the very structure of the brain. You can't force yourself to stay calm when your nervous system is hardwired to react quickly and survive threats. And the market, with its lightning-fast candle movements, is the perfect environment for your emotions to take over. Everything changed when I came across a study from Stanford University. They discovered, after just 21 days of proper training, the human brain can form new neural pathways, changing how we respond emotionally. I didn't need superhuman willpower. I needed to rewire the way I reacted to the market. So I began experimenting with a simple, yet surprisingly powerful routine. Each morning, before opening the charts, I wrote 3 lines, short and clear. I'm grateful I didn't buy Luna at the $100 top. I am calm because the market will still be here tomorrow. There are 8 currency pairs, 3 sessions, that's 24 opportunities. I don't need to rush. At first, these lines didn't seem to help, but I kept writing every single day without fail. Then came the moment Solana surged 12% in an hour. My hands trembled. I felt the itch, the urge to jump in. But this time I paused. I listened to my heartbeat. I noticed the tightness in my chest, the shallow breath, classic signs of FOMO. I pushed my chair back, closed my eyes, and did box breathing. 4, 4, 4, 4. Just 1 minute. When I opened my eyes, the price had already moved on and I didn't enter the trade. No regret. I felt stronger. I began scoring each trade based on a system: trend, structure, momentum, risk-reward ratio, and confluences. If a setup scored less than 8, I skipped it. No debates, no gut feelings. I also changed the way I viewed wins and losses. Every trade was recorded in R multiples, not in dollars. A -1 loss was a lesson. A +2 win was a product of the system, not luck. I slowly began to realize trading isn't about predicting correctly. It's about staying disciplined to your system and repeating the process step by step. 3 weeks later, my account hadn't skyrocketed, but my emotional volatility had dropped drastically. I was no longer the panicked man clicking the mouse in chaos. I had become the one behind the mouse, calm, deliberate, in control. I used to believe that as long as I studied enough technical analysis, mastered candlestick patterns, and read indicators fluently, I wouldn't fail. But I was wrong. What caused my consistent losses wasn't a lack of knowledge. It was the subtle psychological traps silently operating in my mind without me even realizing it. The human brain tends to overweight recent events. When Bitcoin rises for 3 days in a row, I would convince myself that the fourth day had to go up too. But the market doesn't move in emotional streaks. Each candlestick represents an independent probability. That false sense of familiar pattern led me into many wrong trades. I also used to get stuck in my own echo chamber. After buying a coin, I'd only seek out positive news and ignore warnings. My brain actively filtered out opposing views, as if trying to protect my ego. So I held on to losing trades for weeks just because I believed things will recover eventually. One of the most dangerous illusions I ever fell into was overconfidence. After a few winning trades, I thought I had figured out the market. I started increasing position sizes, loosening stop losses, ignoring the rules I once respected. And just one bad trade, and everything collapsed. My past gains evaporated in a single morning. There were also times I got anchored to past price levels. I bought a stock at $300, and when it dropped to $150, I refused to cut the loss. All I could think was, it used to be $300. It'll bounce back. But the market doesn't care where I bought. It moves with supply and demand, not with my memories. I once believed that after many losing trades, the next one was due to win. That belief pushed me into over-leveraged positions, hoping to recover it all. But in truth, every trade is an independent roll of the dice. A losing streak doesn't increase the odds of a win. And perhaps most of all, the fear of losing money is stronger than the joy of gaining it. I used to take profits quickly at plus 2%, but held on to losses all the way to minus 30%, just because I didn't want to lock in a loss. That mindset made me cut winners short and let losers run. The result? A distorted risk-reward ratio and a shrinking account. These psychological traps aren't personal flaws. They are evolutionary leftovers, mechanisms wired for survival, not for trading. And if you're not aware of them, you'll repeat the same cycle of failure over and over again. I've fallen victim to them all. But it was from those failures that I began building a new system, where each trade is scored, every emotion is tracked, and each entry is a decision based on structure, not impulse. After too many losses driven by emotion, I realized I couldn't keep trading on instinct alone. Every time I looked at a chart, my head was flooded with voices. Look at that green candle, jump in. This is your last chance. If you miss this, you'll regret it forever. I needed something clear, something that could counter those impulsive urges, a truly objective filter. So I started scoring every trade setup, as if I were selecting a sniper for a mission. Each trade had to pass 5 criteria: trend, structure, momentum, risk-reward ratio, and technical confluence. Each category was scored from 0 to 2. If the total score was below 8, I'd discard the trade. No mercy. Trend was always the first thing I looked at. If the market was trending up, I only looked for buys. If it was trending down, I only looked for sells. If a setup went against the trend, no matter how pretty, it was out. Structure also had to be clear: well-defined support-resistance zones and repeatable price patterns. If the chart was messy, I stayed out. Momentum came next. I needed to see confirmation: rising volume, RSI alignment, and candlestick patterns forming in the right spots. If there was only one strong candle but no support from the other signals, I passed. The market always lays traps for the impulsive. I also calculated the risk-to-reward ratio carefully. If I was risking 1 and could only gain 1, I stayed out. I looked for trades with the potential to earn 2, 3 times more than the risk. And finally, I checked confluence. At least 3 overlapping technical factors: a trend line, a Fibonacci level, a historical resistance zone. The more overlap, the stronger my conviction. I tested the system over 3 months. The results were surprising. Trades that scored 8 to 10 points had nearly a 70% win rate. Meanwhile, the trades I used to enter based on gut feeling or some breaking news, they lost almost 80% of the time. I no longer had to guess. No longer had to wrestle with myself every time I looked at a chart. Everything became clear. Either it's an A-plus setup or it's nothing. I began trading less, but with more precision. My account stopped swinging like a roller coaster. It moved slowly, but steadily. And most importantly, I no longer felt like a gambler at the table. I became the one running the table. In the next chapter, I'll share how I prepare my mindset before every trade. A small, simple ritual that completely changed the way I enter the market. Because sometimes, the biggest difference starts with a single breath.
I used to think placing a trade was as simple as looking at a chart and clicking a mouse. But no. The most important part happens before the click. It starts with the breath. I inhale for 4 seconds, hold for 4 seconds, exhale for 4 seconds, then hold again for 4 seconds. I repeat this cycle 3 times. The steady rhythm slows my heartbeat. In those moments, I can feel the urgency dissolve. My eyes stop darting across the screen. My hands stop trembling. I'm no longer afraid of missing out. All that remains is calm. Next, I listen to my body. If my chest feels tight, if my hands are cold, if my head feels heavy and my eyes blink rapidly, I know I'm tense. I don't enter trades in that state. I get up, walk for a few minutes, drink some water, take deeper breaths. The market will still be there. Opportunities won't vanish, but a bad decision made in seconds can take weeks to recover from. Once my body feels grounded, I open my trading journal. I write a few short lines. How do I feel? What is my goal today? What might cause me to lose control? Writing makes me honest with myself. If I notice I'm trading to make back losses, I stop. If I see I'm trading out of boredom or euphoria, I stop. The journal is a mirror. It doesn't lie. Only after my mind has settled do I open the chart. I look at my scoring system. I don't ask, is this a good opportunity? I ask, how many points does this setup score? And I only take the trade if it scores 8 or higher. No emotions, no gut feeling, no hopeful thinking. Finally, I read 3 affirmations. I am a disciplined trader. I only take the best opportunities. I don't need to win today to succeed. It might sound silly, but after hundreds of repetitions, my subconscious began to believe it. And the subconscious drives behavior. I used to place trades like a starving man chasing every opportunity. Now, I trade like a sniper, patient, calm, waiting for the perfect shot. And when the opportunity comes, my hand no longer trembles, because I was ready before the market ever moved. I used to think to win big, you have to bet big. But after a few painful losses, I realized that's the mindset of a gambler, not a professional trader. A losing trade doesn't just cost money, it shatters your mental state, pushing you to take the next trade not from analysis, but from emotion. Every time I risked too much, I lost more than capital. I lost myself. So I made a rule. Never risk more than 1% of my capital on a single trade. It sounded small. Even a winning trade didn't change much. But when I zoomed out and looked at the long-term chart, I saw something powerful. Patience compounds into strength. One time, I had 3 winning trades in a row, about a 3% gain. I felt the rush, the urge to double my next position. But I stopped. I remembered what happened last time. One bad trade erased the whole streak. So I stuck to the rule, 1%. That trade lost, but instead of spiraling, I just recorded it and moved on. A friend once laughed at me. He risked 10%, sometimes even 20% per trade. When he won, the profits were huge, but just 3 losing trades wiped out over half his account. After that, his mindset cracked. The next trades were driven by panic, by blind hope. I watched him implode in just 1 week. I didn't laugh, I just felt sorry. That's when I understood. Losses don't destroy you, losing control does. The 1% rule is my seatbelt. It keeps me alive through the crashes. It helps me stay calm when the market turns against me. And most importantly, it lets me stay in the game long enough to learn how to win. Whenever I talk to traders with years of experience, they all say the same thing.
This game isn't for the impatient. The winner isn't the smartest one. It's the one still standing after 1,000 trades.
I used to believe that opportunities in the market were rare, like shooting stars. Whenever I saw a clean chart, a strong candle, I immediately wanted to jump in. I was afraid that if I didn't act right away, the opportunity would vanish forever. But that rush, that urgency, it cost me more than any single loss ever did. One Monday morning, I woke up, opened the chart, and saw a setup I thought was unmissable. I didn't wait for confirmation. I didn't score the setup. I didn't even check the market structure. I just placed the trade. 5 minutes later, the market reversed. That trade didn't just lose money, it triggered a wave of emotional chaos. I tried to recover. I took 3 more trades that morning, all of them losses. By noon, I had lost 12% of my account in just a few hours. I sat frozen in front of the screen asking myself, why was I in such a hurry? The market is always there, but my mind was always panicking as if I was about to be left behind. What I feared wasn't missing a trade. What I feared was the feeling of being left out, of not being part of something that was happening. I learned to pause. Whenever I feel the urge to trade out of FOMO, I close the chart, stand up, take a walk. I write down one question. What if this isn't the only opportunity? And almost every time, the market proves one thing. Opportunities always come back, as long as I still have capital and a clear mind to receive them. Over time, I noticed something strange. The fewer trades I took, the more consistent my profits became. The trades I chose carefully, the ones I waited for, had a much higher win rate. And I realized the cost of rushing isn't just money. It's losing control. It's losing yourself for a fleeting sense of excitement. Now, I no longer chase the market. I let the market come to me. And in the silence, in the patience, I found a new kind of strength. The strength of someone who knows how to wait. I once lost almost everything. Not because of a sudden market crash, not because of some unpredictable news, but because of me. Because of greed, overconfidence, and a refusal to accept I was wrong. I stood at the peak of my account, and within just 4 days, I fell into the abyss. Over 40% of my capital. Gone. Mentally exhausted. It felt like I had lost not just money, but a part of who I was. That night, I didn't sleep. I sat staring at a pitch-black chart, no candles moving. My eyes were open, but my mind was empty. No anger, no regret, just a suffocating silence. And in that stillness, I realized, if I kept going like this, I wouldn't just lose money. I'd lose my self-respect, and maybe my future. I shut everything down, deleted my trading apps, left all signal groups, turned off every notification. I didn't quit. I paused to recover. I spent a full week doing nothing but sleeping well, eating properly, reading, meditating, no charts, no candles. Just facing myself. Fully. Honestly. In the second week, I started writing down everything. Where I went wrong. How I reacted. Why I refused to stop. Writing helped me see the truth. No more blaming the market. No more calling it bad luck. Every failure had started inside me. Then, I went back to paper trading. No real money, just simulation. I followed every rule I had written. 1% risk, A-plus setups, pre-trade rituals, emotional check-ins. I didn't rush back. I tested my system one step at a time. I redefined my goal, not to get rich quickly, but to survive long enough to learn how to win. The following month, I returned to the market, but with trade sizes at just 25% of normal. Only 1 trade a day. Every trade I managed from start to finish. The profits were small, but I felt something I hadn't felt in a long time. Peace. No panic when I lost.
No euphoria when I won. Just calm observation, decision, and acceptance. I don't know how far I'll go, but I know this. I've overcome something bigger than the market, myself. Failure wasn't the end. It was a comma, a moment to pause, to breathe, and to continue with a better version of me. And this time, I'm no longer a trader trying to beat the market. I'm a trader who has learned how to win against himself.